right. Welcome, Mish. I hope you had a great Thanksgiving and you're looking forward to December. It's the first trading day of December. I always love the first trading days of the month. So that's going to make this pattern we're going to talk about today even more interesting. How are you doing?
Well, Jeff, yeah, we had a great Thanksgiving, and it was really nice to take a little bit of a break. I hope you guys did also a fine job of eating and being merry. And also, it's the start of the whole holiday season, so it's such an interesting thing. Not only the 1st of December here, or 2nd of December, the first day, but so much anticipation about what's going to happen at the end of this year and then coming into next year, which is why this topic we've got is perfect.
Yeah, I've got the wrong chart up here. Let's start here with the Qs. Because they, I believe, closed at a new high today. If they didn't actually close there, they are really close. Um, and as most people already know, if we take a look at the SPYs, they had already broken out above their highs. So they're familiar with the new high territory. And let's take one last look at IWM, and then I am going to say, what do you think of the bonds? All right, so looks like IWM consolidating here for 3 days, but not a closing new high, but as everyone can see, has punched to its new highs from earlier in November. And that brings us back to the TLTs.
And one comment about the Russells is that the high in 2021 was 244.50, give or take. And
Right.
so far, our high's been right around the same. So this consolidation, we hope, is getting ready for it to power up above and beyond that high and keep on going. Otherwise, we have that possibility of a massive double top situation. Yeah, there you go. And that would not be good. But right now it looks more strong than weak, so that's a good thing. And by the way, I like to put the underscore and then the symbol.
Yep, yep.
So you're looking at
Underscore.
underscore first, then the symbol.
Yeah, which is a more accurate chart. I was wondering why we're at that new high.
Yeah, that now you can see that we really haven't gone to the new high
Right.
yet.
We're like there to the tick. You're right.
So where would I think, oh my God, double top? I mean, probably if it started breaking down under the 10, I would get pretty nervous, 10 being the cyan line. At this point, I'm not nervous at all, but it's just something to not get complacent about.
Yeah. Yeah, that's true. That past high is pretty far back, and it's easy to miss unless you really look left.
Right.
And here's the
Or are
weekly.
really obsessed with small caps, which I am. I mean, look at
All
that.
right.
You had
Yeah,
such a
yeah,
beautiful base. So the chances are it's just resting, but what is it waiting for makes you wonder.
yeah. I remember that breakout. Not afraid to admit that they caught me on that one. Thought that really looked good. Um, all right. So, but the point of today's conversation is the TLT, but the TLT in the context of all of the indexes. Even if we were to go look at the equal weights, they are either right up against an important high, just breaking out of a new high, or have recently broken to a new high. And then we have TLTs. And let me make sure I put the right, even though I don't think it'll matter with TLTs.
Yeah, I'm
Yeah,
just still looking at things consistently.
yeah, you're totally right. And let me go to daily. So we are looking at the 50 as the blue moving average and the 200 as the green moving average here in the TLTs. And we're sitting right at it.
Yeah, and it's interesting because I traded the TLTs only once this year for the discretionary side of life. And that was, I bought it at around 86. I actually, so that was in July. I actually sold a little bit at 99 because I knew 100 was really good resistance. And then I stuck with it until it broke down back under that 50-day moving average in September. And I have not touched them since, but that was a pretty good rally. And
Yeah.
yeah, and it employed all the things that you and I always talk about. There was a phase change, there was a golden cross, momentum started to pick up, it started outperforming the SPY. So we could say that was an anomaly based on a lot of chatter that the Fed was going to be more aggressive with rate cuts. Or we could say it was at a time when the market started to sell off and people were a little bit more worried about risk. It was the whole Japanese yen trade carry narrative was going on. Or it could be a preview to what might be coming up now. And I think that's why it's interesting to mention.
Yeah, so we've got some interesting stuff lining up here. Again, we've got the moving averages. We also, which you pointed out earlier when we were talking, we are at the top of our July calendar range, which has really defined the price action in the bonds here for the last couple months. Uh, the lows. Now the question is, will it get back up above that, right? And it's not just July. If you go back, you've got this level in here too, which is significant. So what are your thoughts in terms of maybe which way you think it goes, or what happens if it goes in either direction?
Right, and that's why the bonds are so interesting, even if you never trade them. It's good to understand the relationships when the relationships are advantageous to the market and when they're not advantageous or disadvantageous to the market, if you will. So, we just know historically, once the yields started rising at that peak in IWM, by the way, in 2021, as we were getting into 2022, the reason why the small caps were peaking at that point was because the Fed was starting to aggressively raise the rates. And that's a very clean relationship. So I think the first thing we have to consider that this is nothing more than a rally into resistance. And if the bonds start falling back down or yields start rising again, and we do have a Fed meeting and we do have a couple of other big stats coming out, like at the end of the week, the jobs number, then I would take that more as a warning on how we started, right? Which was with IWM potentially double topping, even though right now the momentum seems more in its favor to go up. But that would probably mean that we're starting to see the rally to resistance. Okay. So that's the first thing we have to look for. However, if we look at I love the 6-month calendar range low in July because it made it right in the beginning of July, that first day, and that was really where the rally was coming from. And Geoff has taught a lot about using the reversals on the calendar range as signals to buy. And certainly, if we look at November, we had 3 examples of it touching down on the 6-month calendar range low and reversing. So I just thought that was interesting because it's obviously getting a lot of support at those July lows right now. So nobody believes at this point that the yields will go much higher than where they've been and they've peaked out. So that goes back to the question, so what happens from here and what does it mean? On the advantageous side, I think the reason why Geoff showed you the charts, right, Geoff, of SPY and Qs at new all-time highs, is clearly if we get a relaxing of yields and the yields come off a bit, that could be very, very good, especially for interest rate sensitive stocks.
Yeah,
So
it's certainly, I would think that if this rally in the bonds and which equates to the yields going down, that really should be good for stocks, given that the rally in yields isn't for some fear reason.
well, and that was the second thing I was going to say. The disadvantageous side of it would be now if, let's say, and I love that 95 level. I mean, it's just above the 6-month calendar range high, even though we're going to get a reset and all of that in January. But for now, it's still appropriate. And it seemed like 95 was kind of pivotal. So if
Yep,
we
right
get
here.
through 95, again, would you buy it? I would only buy the TLTs at that point if we thought they were signaling something else, which is things are not so great and we're going more from a risk on to a risk off. And that's where the relationship between the TLTs and the SPY gets really interesting. And right now, if you look at the relationship, oh no, you have two real motions there. You don't have triple.
Yeah, I don't have the triple
TLT
play
is
in
still
here.
well underperforming the SPY. So what we can say right now is this is signaling the relaxation of yields. It's signaling, even with a stronger dollar, that the market is going to be happy. And we have to watch things like real estate, obviously, what that's most interest rate sensitive right now with mortgage rates. And if the yields come down and it makes the economy grow, we'll continue to see an incredible rally. Obviously, even in the small caps, which are more paused here waiting. And of course, if the yields continue to drop and we start to see a halt or some kind of big reversal in the SPY Qs, then you have to start wondering, oh, okay, what's happening here with the ratio? After so long being in a risk on situation, does that mean we could be thinking about 2025 as a risk off? We don't know. We really don't know. So luckily for us at Market Gauge, we have some great things to look at in January to make that determination, but it's premature at this point.
So we didn't look at this earlier, but what if we take a quick look at the high yield um, bonds here? Does this help or not make any difference to you in terms of what you think the TLT might do?
Oh, it makes a world of difference because this has been another instrument that has really basically outperformed the TLTs, which is part of our Big View product, pretty much the entire year, even when we had sell-offs. And you could see the sell-offs, where did it go? It went right down to the 200-day moving average back when it sold off in April. And then again, when it sold off in the beginning of August, it held there great. So you might have had some fear coming into the market through the junk bond traders, but really the fear didn't last very long. And now we're sitting right on that 50-day moving average. And interestingly, this was a little red today, not a lot red, but a little red today, while the TLTs were also slightly red. So we're still not seeing any major shift. But if this starts to come off and breaks back down under the 50, and really, I would say at this point, started to show moves really, I would have to think even lower than that because we've been down here. At this point, I think it would really have to break it around 70, 78.50, under that last red bar that we saw there in
Right, right.
then I would start to think that feels really toppy. So we've got a lot of noise right now. So two things. You got to watch this price because it did come off today while the market made new highs. That's not always necessarily a good thing. It's still well outperforming the TLTs, but like SPY, you want to make sure that doesn't shift. And thirdly, is that this just has any kind of meltdown in and of itself, even before everything else does, even before TLTs take off. What does that mean? The last time we really saw this thing melt down big and keep going was right at 2020 before COVID hit.
Yeah, so I wasn't even thinking meltdown. I was thinking that this breaking out, well, to your point, if it breaks down below here, there's a problem. But if this moves to the upside and TLT moves to the upside, that would give me more confidence that TLT moving to the upside, at least it's comfortable moving to the upside. And as long as TLT is comfortable moving to the upside, then that should be cooperative for stocks.
Until such time it might or end up being inflationary, right? So these are all the things that I watch constantly in these relationships, because right now we have not necessarily beaten inflation to the point what the Fed likes, right? But yet clearly there's some level of normalization going on right now. So what I mean by normalization is that the Fed funds rate and the inflation rate are close together. That's the soft landing that the Fed was hoping for. So yeah, I mean, if we're just looking at everything right now with this little bond rally or the yields falling, junk bonds coming off but not really doing anything, could easily reverse, SPY on new all-time highs. The message is soft landing. whatever little pockets we're seeing in inflation, it's not going to last. And we'll continue either on the track of getting closer to 2%, or the Fed will come out and say, hey, listen, we're happy with 2-3%, because the economy can't grow that much and inflation can't go down much further than that if the economy is going to grow. That's the rose-colored glasses view of the markets as we go into 2025. And then the tainted rose-colored glasses would view is that the rates come down, the dollar comes down, and then as a result of that, what we have now is inflation starts to pick up. And then we'll start seeing it in things like silver and gold and oil. But we're not there yet. So these are all, this is why we love the TLTs so much. They tell so much of a story, and all they're telling you right now is they're in the pocket of noise until they take out 95. That's the way I look at it. And if
Yeah.
they start rolling over, like you and I talked about before, that could also be dangerous, particularly for the small caps.
Right. Now, if inflation starts to really become a concern for the market, the high yield here isn't going to rally either, right? So that would probably cause your high yield to break down below that 78. So I think to to your point and to my point, this high yield, if you keep an eye on it, could pretty much tell you what the market's thinking with respect to the fear of inflation, and confirming or not confirming what TLT is likely to do.
Exactly. And all of this makes perfect sense right now, because right now the market is definitely in the mindset of we got through earnings, things did pretty well, tech has leveled off, but not to a point where it's any major concern. The rally has broadened to other areas, healthy. The stats have come in where the jobs market is still okay. PCE went up, but not by too much. And everything is just hunky-dory with a new administration coming in. But we also know how quickly that can change. So hopefully what you got out of today is, where should you look if indeed things are going to change? Or if things aren't going to change, could we see a much higher number in the SPY going into 2025, as many people believe?
Right. Let me just see if I can get the TLTs back here. My machine's not really cooperating. Back to the TLTs. Here's the big picture. Boundaries. I would have been thinking, as long as we stay over that 90 level, right? That's what we're talking about, the beginning of the conversation. And then I don't know if they do rally. My take is, as long as they're over the 200, good news for stocks, unless, like we've said, it's doing it for the wrong reasons.
Yeah, but could you blow up the real motion also a little bit? Because we were looking at that. We haven't really talked about that.
So here's the
We saw when we were talking before the recording, is that very similarly to what's happening in price with the moving averages is also happening in momentum, in that the 200 and the 50 are sort of meeting right here. I mean, the 50 has been above the 200, and the price has been below. So it's kind of like, from that perspective, even though the dots have been well below, it has shown somewhat of a divergence, a little bit. But now what we're seeing is it more in line, is that the dots started to clear both the 50 and the 200, while so has the price clearing the 50 and the 200. So that's another thing to look at, is even if the price doesn't do very much, watch what the momentum might do, or vice versa. Watch if the momentum basically sits here and does nothing, watch what the price does.
Yeah, I think if the price action continues to move higher and the dots, the real motion continues to move higher, we've got a nice situation where the price is confirmed. It's hard to see this down here. I wish I could change it. The 10 is actually about to cross the 50, and up here we're well away from that. So we are getting a slight divergence here, but with this 1050, I like to see a little bit more of a divergence before I start getting too bullish about it. But certainly, um, we want to make sure that real motion here goes in the same direction as whatever the price does. Otherwise, the price probably isn't going to continue that way.
Yeah, and one other thing to note, by the way, is that the street, which means some really, really big funds, are so heavily short TLTs. They're convinced that inflation's coming higher to 2025 and that the Fed's going to have to actually not just keep rates the same, but actually raise the rates. And I think that that made a lot of sense before a Trump administration as a potential, but now I'm not so sure. So what that means is at what point do they cover? That would be something else to think about as well.
Yeah, well, that would be interesting. All right. So the moral of the story, keep your eye on the TLTs now and going into the future.
Absolutely. And they're pretty much will, like I said, may not necessarily be the instrument you want to trade, but they're always great for telling a story.
And to my comment about I like the first trading day of the month, you can use that for those of you who are familiar with our discretionary stuff as that opening range of the month. That's a great way to get a jump start on which way this thing might go.
Yes.
All right,
All right.
that's all I got.
Me too. And yeah, as some of you may know from looking at the daily, we're heading down to Florida, Keith and I, to the Money Show. So that's where we'll be at the end of the week. But don't forget to check out my daily. The one I wrote for today is on Novo Nordisk. I'm absolutely relentless on the diet drugs and the thin consumer. There was a great article I referred to in the New York Post over the weekend. Trends are changing already.
The vanity trade.
Or the vanity trade, or it's no longer we, it's me. That's another way I like to look at it, which really is a homage to Muhammad Ali, who is as responsible for writing the shortest poem ever, which is true. And if you go back and Google it, during a huge rally, he said, shortest poem ever, me, we.
You
We're talking,
never know. You
yeah,
never know what you're going to learn here.
right. So we, me, though, is kind of the opposite of the Muhammad Ali shortest poem.
All right. Thanks, Mish.
Thanks, Jeff.
We'll
Bye,
call it a
everybody.
wrap. Bye.